Alright guys, good morning. Quick disclaimer, welcome to FX Bootcamp. This is not an alert service. I'm not making direct trade recommendations. What I will do is conduct some live fundamental technical analysis. Hopefully we can put together a positive trade plan or two. Please bear in mind that trading massively leveraged risky, so please do not trade your hard-earned money and leave a track record of success using a broker's play account. How are you guys doing today? Is everybody awake? Derek did a nice job of talking about consistency. I've got a short presentation today, so you mind if I just elaborate on? Somebody asked a question about what builds consistency in trading, and so maybe can I spend 2 minutes just elaborating on that, maybe, and then we'll cut into what we came here to talk about today. One of the big things that, and guys, please, once again, lots of questions always help things move along decently and kind of. All right, so this was sort of my pattern of discovery coming into Forex, okay, or trading in general. So you guys know my background by now. I knew absolutely. Okay, I'll cover that, Jack. We're going to talk about that. We're going to talk about that when I get to the meat of my presentation now. So I just scooted the chart down. So let me just talk about consistency real quick, and then it'll take me 1 minute. All right. So for myself, right, I knew absolutely nothing about trading. Absolutely zero knowledge at all. Okay? Didn't know what I didn't even know that you could really trade Forex. The way that I stumbled onto currency trading was I was sitting in my home at about 3 in the morning, and I saw some commercial on the television advertising some red arrow, green arrow thing, and meet at the Marriott Hotel, and we'll tell you about how you can get filthy rich. Well, at the time I was getting discharged from the army, so I was basically sitting around doing nothing. So I thought, oh well, I'll go along. Well, they obviously didn't sell me on the $4,000 software, but they did sell me on Forex. And so, you know, one does the normal thing, right? You go looking for info, don't you? Like large quantities of information. All right, where do you typically find that sort of thing? I don't know, baby pips. Right, the various. I don't want to say something contradictory to FX Street, but you know, baby pips, FX Street, and you know, Forex Factory and all these other different things. You know, Forex Factory and various brokers, websites, etc. Right? And there's a relative sort of cornucopia there of that's tremendously terrible writing, but you know what I'm saying. So there's an absolute cornucopia of information out there, isn't there? I mean, you name it. Yes, sound is fine. Right, so what one does though is from this you get information overload, don't you? Right? I mean, just massive amounts of information. All right, and it's very, very difficult. It's very, very difficult to reconcile this, isn't it? You want me to turn it up a little bit? Okay, is that better? I'm always wary of the Darth Vader. Okay, so what is the problem with this approach? Okay, the problem with this approach is that one gets too much information. All right, which is a kind of a silly thing to say, actually. All right, but what one does is, particularly from Forex Factory, right? Because you've got a lot of folks on there that are doing their best to contribute, but you've got a lot of people here that know nothing, but will sell you on knowing everything. And then you've got a bunch of guys that know a ton of stuff that are really not really particularly willing to share it. All right? And then you've got a lot of falsities out there too, where people are telling you different things. And, you know, if you use this crossover method and this thing crosses this and that crosses there and this goes underneath that, then you're going to make money. And if this does this and this monkey this primate does this gymnastic trick, then you need to long, and when the moon lines up with Mars, then you need to short. All right? Well, what happens is that one wants to try everything. Okay? So you wind up with a methodology here of a million different things. Okay? Right? I mean, a million different things, right? Methodology here for just, so you're trying crossover methods, you're trying oscillator stuff, you're looking at price action things, you might be going for fibs, you might be going for market harmonics, you might be going for Elliott wave, you might have, just general spot. You're trying everything. Okay? However, generally what makes sense to you, don't you? I mean, just take FX Street's contributors, for instance, all right? There's some contributors that have a big following, and then there's some that don't. But then the some that don't also have some staunch followers, all right? And what it boils down to is there's many ways to skin the proverbial cat. And ultimately, it's what you can internalize and what makes sense to you. So if somebody rings some sense in a year, then it's time to become an expert on it, all right? But the problem is that in the methodology phase, people try 25,000 different things. I know I did. I tried a million different things. Okay? And after about 3 months of trying everything, okay, I had mixed success. However, because I was trying so many different things, I really didn't know what was working for me and what was working against me. And as a result, it was just mass confusion. I never had a baseline to work from. You with me? And I think that this is the root of inconsistency with regards to trading approach. All right? So for me, as a new trader, I'm speaking specifically to the person that's getting their feet wet in Forex. Okay? I think that you need to have some kind of consistency in your initial approach to trading. All right, so for example, let's say you're trying, I don't know, Elliott wave. All right, and let's say you're trying to figure it out on a 5-minute chart. Now, I'm not an Elliott wave guy. I know very little about it. But let's say you go about on a 5-minute chart and you figure out that, you take, say, 20 trades. And you figure out that you had 12 losers, 6 winners, and no break-evens. All right? Now you make a small change to this. All right? Small change, and you do another 20 trades. So now let's say that you expand this to a 15-minute chart, and you add, I don't know, some support and resistance stuff, and you take another 20 trades. And now you see, okay, look, I have 10 losers, 6 winners, and 4 break-evens. So this would be 2 break-evens here if my math was right, and 4 break-evens. So you've actually improved your result a little bit. Hey, Colin. All right, and then you make another small change to this, and you do another 20 trades. All right, and you can do these on the Forex Tester, you can do these on your demo account, whatever. But what I'm saying is that you start out to the basis, and you start making small incremental changes to things. And this process might take 6 months. So be it. Until you have a mechanical strategy that is right around break even, if not a tiny little bit positive. All right? Then you can start doing things like tweaking your money management. All right? Learning how to cut your losses quicker. Using a little bit of discretion as your confidence level grows and your experience level grows. All right? But trying and doing too many different things is going to compromise your trading development. I'm a firm believer in it. It's very important that you find something that you understand. And that might be something you've come up with, something somebody else has come up with. I don't care. All right? I tell people at boot camp all the time, I think FX boot camp's a method. I don't think it's the best method. I don't think it's the worst method. It's a method. All right? It's going to get you to where you need to go, but you need to develop some consistency with it. It's like anything in life. There's many different ways to hit the golf ball, many different golf swings, but a lot of them do the same thing at the end of the day, but they have to be yours. All right? So as far as consistency, trying too many different things is going to make you consistently inconsistent. Does that make sense? So, I hope that kind of resonates. And I'm sure a lot of people have gone through many of the same things where you've tried a million different things and you're not really certain. And the problem with this is that when you're in a trade that's working adversarially against you, right, but hasn't really broken the trade plan, so to speak, one tends to jump ship because you have no confidence, right? If you don't know what's working for you and what's working against you, how do you have any confidence sticking to a trade plan? Sure, I'll go along with that. But you need to be able to identify what those different conditions are. All I'm trying to say is that I find that even if you're wrong, it's important to have a definitive strategy for when you're wrong or you're right. Not just by the seat of your pants. That's all I'm trying to get at. And then you have a baseline to work from, and then you can start making changes. Because otherwise your brain will never make a positive association to any one particular trading strategy. And then your trader psychology can never settle down to something that's going to be good for you. Right? So it's all this big knock-on effect. That's all I'm getting at. All right? So that's my 2 pips on consistency. Have a baseline and then make changes from there, and your brain your psychology will also improve because you'll have a consistent approach. You'll know what's working for you and against you. All right? And you also got to remember that you can jettison 90% of the market and still make money, meaning that you don't have to trade 90% of what goes in front of you. You only need to capture 10% of it, and you're going to be fine. Okay, so let's talk about why my mission for today. Okay, so I want to talk about so the buzzword for trading is don't micromanage, right? I think we're all guilty at some point of micromanaging our way out of good trades to some extent, all right? But today I want to talk a little bit about how to micromanage effectively, all right? So I'm going to go against the conventional wisdom here, I guess, so to speak. All right, because one of the things that saved me many times, guys, I'm looking for your participation here, so don't disappear on me, but one of the things that saved me a lot day in and day out is just being able to cut losses quickly. Now, does one throw the baby out to the bathwater sometimes and cut your losses too quickly, and then you've compromised a good trade or two? Absolutely. All right, but generally speaking, cutting losses quickly is going to, instead of a 25 pip loss, it's an 11 pip loss. All right, that adds up, doesn't it? Instead of a 30 pip loss, you take a 18 pip loss. All right, so there's a couple of things that one needs to establish here. One of them is working out when a trade is working against you. All right, so there's a fine line between allowing something the space it needs to work as well as cutting it too quickly. Agreed? It always seems to be this little knife edge. Do I cut it now, or do I allow it space to move? All right, so what I'll tend to do is I'll allow price action. Morning, David. Thank you. I allow price action to determine that for me. All right, to a certain extent. Now, that said, I have no problem taking a second trade entry in any given trade plan. All right, which I cannot say that I did not have that level of confidence early on in my trading years. All right. So how many of you have, if you've taken a trade and it has not worked, how many of you have a problem taking the same trade again? I think that's a key thing, is providing the trade plan is not broken, staying committed, even if you've got out of it because it didn't look right, yeah, having the conviction to take that trade plan again, and then you'll look back on it and be like, oh my goodness, it actually worked out in retrospect. Okay, so getting over that, I think, is getting over that, I think, is an important thing. Okay, so, all right. So let's just come up with a couple of little rules here that might help you out. All right. There are two types of trades that I think most of us take principally. Okay, number one, the only way you're going to be able to mitigate your risk or cut your losses quickly is by trading only at support or resistance. Okay, that means no breakout trading, guys. That means you don't just take it along because the candle turned green. Okay, so the number one rule in cutting your losses quickly is only trading on support and resistance, because this is what helps you mitigate your risk. Does this make sense? So if you're doing something like this, let's say price has done this and it breaks down, retests it. Okay, you don't know whether this is going to continue to the short side. Okay, you don't know whether it's going to continue to the short side at all. All right. However, generally speaking, it will come down to the fib of the rise. Okay, so we're going to call this a green zone. We're going to call this a red zone. You guys have seen my previous presentation, so you sort of know what I'm talking about. This is resistance. We're going to use fib references, but really it's just support and resistance. Fibs are only support and resistance. All right, so let's say this is your red zone here. It might be the previous swing low. Let's say there's a central pivot there and a fib, etc. All right, lots of confidence. Chances are you're going to see a reaction there, right? And then if this trade's going to fail, it's going to come to a higher low and continue to the upside. So this would be your green zone, hypothetically. Okay, so when you take any trade, trading only off resistance, you should trade as close to that resistance as you can, and then that reaction to that area, that drop there to that area, that is your risk mitigation. Meaning that reaction should be enough, typically, to get your stop somewhere around break even. It might not be break even, but very close to it. Okay? So for me, in a spot trade, so I'm talking about something where I'm typically risking about 20 to get 60, or risking 25 to get 60. My typical loss will be about 8 to 14 pips. Even though I'm risking more, that'll be my typical loss. Pretty broad question, Giorgio. George, okay, I can talk about that. I mean, I think the important thing for me is just I've been having a tough time spotting it to the number, but in a 10 pip range, it hasn't been too much of a problem, and that's largely just based on dynamic moving averages and visual support and resistance. But I'll elaborate on that. How much space should it have if you trade at support or resistance and it breaks resistance? You mean something like this, Robin? That if it looks like it's broken but then kind of holds it and actually works out anyway? That's what you're asking? Like how much can it break it by and still hold it? I mean, is that... Okay. Well, I think that largely depends on the type of level that you're trying to trade from. Would you guys agree, looking back on your charts, that this is a support area on the euro? Okay, let me finish up this one point and I'll circle back, all right? Good question. Good question. Okay, so let me finish this up and then I can erase it off the screen, all right? So for me, trading off support or resistance is the key thing because this reaction of about 15 pips is what one should get to break even. Okay? The novice trader gets short here, and then when this works against them, they panic, get out, and then it actually works for them, and then they take a -10, and it's all good anyway. All right? So trading off support and resistance by itself, I think, is the first and foremost rule. Would you guys agree with that? Now, having the discipline to do that, that's on you. If you don't have it at support or resistance, then don't trade. All right, so let's talk about something here a second, all right? Let's say you have a daily level of support. What I mean by a daily level of support. Okay, take the euro for instance. This zone here to start the week, all right? Let me zoom out a touch. This is weekly level now. Would you agree that this is an important zone? Look, previous swing low, hesitation here, previous swing low, high, 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 low, low, low. I don't think it's difficult to decipher that that is an important number on the euro dollar, not to mention this trend line coming up here. Okay? But look here previously how look here previously if I go to a daily chart, let me show you. Okay, notice here on this daily chart how, if I zoom in, okay, this is the same level on a daily. Notice here how these candle closes were actually somewhere around 128. And this candle high was actually somewhere around 129. And this candle low was in the mid 128s. So it just tells you that this level is support. Well, we've just painted that with a very broad paintbrush, haven't we? Okay, the better part of 60 or 70 pips. Okay? So, long story sideways, for a daily level of support, really 100 pip zone is about right for a massive daily level like that. Okay? Don't think that a daily level of support, you're going to hit that level and bounce hard every time. It just, unfortunately, doesn't work like that. So, if you're going to trade off massive daily levels of support, you better have some kind of fractal breakdown for yourself. Okay, so if I was going to try and long off this, which I think is a buy for the next couple of day and a half, all right, I'm going to need some price action on almost an hourly chart that would help me out. All right, so I would need, or even a 15-minute chart, I would need something to confirm the change of trend. Okay, so if I was looking at a 15-minute chart, I would need something along these lines. Right, it's made a little double bottom, so, you know, possibly it breaks this high here. So something like this, and then look for a green zone through there, and then try to buy that. Okay? Because I would need something to help me, define a stop. Okay, and then if this trade didn't work out, let's say I made a lower high and a lower low, and I got out, and went a little bit lower, I would take the exact same signal again to the upside. So for a daily level of support, 60 pips, 70 pips, it just depends on relative volatility, you know what I mean? 2008 when the unwind was on, 100 pips was nothing. Now 50 pips is a lot. Alright, so you've got to take into account sort of relative, the volatility of the period too. Okay, that's important. All right. Now, if you were talking about something like this, where you said, okay, well, I want to take a fib of this drop. We talked about this on a boot camp last night. If you're doing this and you say, right, I want to take this, and you're looking at this swing low and the 50% fib here and stuff, you really don't want to see it break just this little area. But you know what? It's not meant to be a broad area because it's a short-term trade right off resistance, trying to pick up the previous lows, just trade the continuation. That's what it's meant to be, and therefore 10 pips to 15 pips is the tolerance you're looking for. So I think you've got to be specific with yourself as to time frame, relative area, how much confluence is in that zone, that kind of thing. Make sense? Yeah? So define that for yourself and become comfortable with that, and then have a sort of a fractal breakdown as the confirmation you want for that particular area. All right, now, there's two types of trades that I'll principally take, okay? One of them is, I'm going to call it the pullback PB, sorry for all the abbreviations here, the pullback continuation trade. All right? And the other one is the turning point trade. Okay? Turning point trade. All right? I do not believe in doubling at all. That's how you get fired from Morgan Stanley. I mean, from Jamie Dimon's spot. That's how you get the axe on that one. Yeah. They're not that excited about that. Yeah, so I think, Robin, you're better off. This is just my 2 cents. Now, martingale works for some folks. Yeah, no, guys. Thank you. The martingale works for, and I just adverb that just because I can. It works for some people. I do not advocate it. If it's your thing, go for it. Honestly, I just don't think I have the guts for it, even if it does work, because I've seen a trend and I've seen being wrong, and it can hurt bad. And you can wreck your account in one trade and really not really be that, not really have the trade work adversarially against you. Now, it's different if you said, now I'm okay with if you said, right, I think the euro is going long today, and this is 0.1, this is 0.2 and 0.3, and if you put on 0.1 and you said, right, let's say you're trading an entire standard lot, and you said, right, I want to put on 40K here. And then if it goes to the next level, I'm going to put on 30K. And if it goes to the next level, I'm going to put on 30K. And if my stop is underneath all of that, and that's 1% of my trade account, then that's fine. Because, and then if it just goes off and it takes your 40K with it, then you earn it anyway. And it doesn't pick up the other lots. I think that's different. To me, that's not adding to a loser. To me, that's one of those where it's a trend. You're trying to pick up a sell or buy point. You're not 100%, morning Mad Hat, you're not 100% sure as to which level it's going to go from. Nice euro odd trade there, by the way. You're not 100% sure what level it necessarily wants to go from. I'm okay with that, but to me, that's not adding to a loser. There's a difference, right? Okay, anyway. So two types of trades here. One, the pullback continuation trade. Two, the turning point trade. All right? So this trade here would be the continuation trade, agreed? The little continuation trade. Now let's say you're trying to take this long up to this sort of area, which I'm thinking. All right, this is my next trade plan, or sort of something like this up here, and then more of that. All right, this would be your turning point trade, TP, and that does not stand for toilet paper. All right, and this would be your pullback sort of trade. So today I want to talk about the turning point trade, because basically the continuation trade, you're picking a zone, you're setting a stop, and you're going to live with the result. All right, for the most part, I'm generalizing a little bit for the most part. All right, so I want to talk about that trade where basically you're trying to pick a turning point, aka, we'll call it the turning point because I don't want to call it picking a bottom or picking a top. That's not really where I'm going with it. Okay, but let's say that you were watching let's say that you were watching let's say that you're watching that daily level of support and you were going to try and long this area. Okay, remember that this is a big daily green zone, right? This whole thing. Would you agree? We looked at that. Okay, so now let's say that you saw it hit this. This was daily S2 today as well, by the way. Let's say you saw it hit S2. This was London Open. And actually, this was London Open 3 here. But let's say you were watching this as S2, market open, previous support, and you said to yourself, right, I think this is long for about 80 pips before heading down. Okay, but you know that you're fighting the trend a little bit. Okay, now, bear in mind that if a change of trend is going to happen, it's likely to look like this. Lower high, higher low, higher high, and the change of trend happens. Okay, or it'll happen like this. Lower high, lower low, lower high, lower low. And then it'll actually break these last two previous swing highs and pull back for continuation, right? So generally, or, the other one is it'll come down, make a double bottom, break the high, and then, which is pretty similar to these two are fairly similar. And then this is the odd one out just because it has to break two swing highs. This is my definition, by the way. I'm not sure that this is necessarily a textbook definition, but it's mine. All right, reading back to that whole internalize your own trade deal. Okay, so now you are saying to yourself, right, I want to trade up this massive daily level of support. I think this is a buy for 100 pips. Let me give this a go. Okay, and because it's a daily level of support, you allow it to bounce there first. You allow it to prove itself to you a little bit. Let me do this. Okay, and I'll expand this a little bit. All right, so there we are. Okay, now what I like to do is basically try and anticipate a higher low, because if we're watching this model of price action, you guys bored yet? If we're watching this as a change of trend, this here would be the first component of that change of trend, agreed? We're getting into nitty-gritty technicals here, so if you're bored, I apologize, but this will save you thousands of dollars a month. Thank you, David. Even if that's sarcastic, I'll take it. All right. So, okay. So here is potentially the first component. Now, how do you know that this is going to make a higher low here? How do you know that? You don't know, frankly. You don't know. No, you don't. You're speculating. Okay, because it's support. You're anticipating a higher low. Next thing, you get a little green candle. I like to see this thing, after it comes off, if it makes a lower high here and then an immediate higher low, generally will take that. All right, but this to me is as good as you can do for a higher low. I mean, it just looks like a higher low. Now, do you know necessarily if it's going to make a higher high? No. But if this comes off where I anticipate a higher low and I start to get green, I'll just enter that trade. For a breakout, to me a breakout is something like this, George. I guess our definition of breakout needs to be identified, because to me if it was something like this, you had a trap and basically you said, well, when it peaks below here, I'm going to short no matter what. That to me would be a breakout. And you're just shorting at the lows, hoping that this momentum continues. That to me is a breakout strategy. Okay, so I've never been a big one of that. Now, if you said, okay, well, I'm going to take a shot off the resistance. Oh, it makes a lower high at the fib of the drop. All right, I'm going to take a shot here at the resistance point, and then it does this, and hopefully, now that's different. That's shorting at resistance in the downtrend. I'm all right with that. But as far as waiting for it to break and then trading it at the lows, you're in the worst possible management position. You haven't mitigated your risk at all. Remember, trading is about one thing and one thing only, mitigating and taking care of your risk. Profit will come, guys. Profit will come. If you're worried solely about risk, your whole mentality will change. Too many people are worried about making money. What you should be worried about is not losing every cent you have. Okay, there's a fundamental difference there. I'm not talking about fundamentals about Greek CPI here. I'm talking about there's a fundamental mentality sort of switch there. Anyway, this is nitty gritty stuff, so let's get with it here. I'll get rid of this 5 MA. Okay, so here we are. We've made our high and low. Now, if this is going to go up, what does it need to do? Immediately, it needs to break this. Needs to break this, right? Because this is the short-term red zone here. Am I agreed? Agreed? And if it's going to work, it needs to hold this as a red zone. Now we're getting ready, a green zone. Because this is the little swing of the rise, right? So if this thing is going to continue up, it needs to break this red zone immediately, or it needs to hold this little green zone. Does this make sense? The trade of the day, I think the Aussie dollar is probably a higher low buy for about 100 pips. And I think the Swissy is probably looking to roll over maybe back to about 92.80. Okay? So now, this is, okay, so my thing is that in a turning point trade, what people do is just put a stop down here. So, okay, I'm in for a penny, in for a pound. Let's go, bro. Now, what confirms I will be, yes. I need to see it come back to about 99.70 odd, but yes, 75. Okay, now, what a lot of people do is they'll just put a stop down here and just let it go, and I'm okay with that. I'm okay with that in a continuation trade. I'm not okay with that if you're trying to pick the top, pick the bottom. All right. Now, so if this is going to work, it needs to make a higher low or it needs to break that red zone ASAP. Okay. Red candle. Right. Red candle in a downtrend, generally speaking, means what? Check that. Lower high, red is not the right word. Lower high in a downtrend generally means what? Continuation. Exactly. Continuation, right? Okay, now, you're now okay, so this turned red exactly where you didn't want to see it turn. It turned red exactly at the point you needed to see it break. Okay, so now your only hope left is that it's going to hold this higher low area here, isn't it? Because this is the little higher low of the rise. That's your only hope. Okay, so now, so generally speaking, it'll actually turn a little bit green here. But then if you start to get another lower high, you better pay attention, because if you break this low, you've now redefined the trend back to the downside. And it's time to get the heck out of Dodge. If you're not going to take the short side, it's time to go, guys. Okay? Oh dear. Right, and look at how initially this did turn green. You see that? But still made a lower high in your red zone. Okay? And now it's actually made a lower low with respect to this candle, and the last ditch attempt is that it actually can hold this one. But so far, you're not looking great. Okay, and now it's made a break of this. Okay, so now actually you've redefined the trend back to the downside, haven't you? It's time to get out, guys. Well, I was just giving an example of a type of trade, Chris. and it, because my whole message here was how you can use price action to cut a trade quickly without taking a full loss. That was the whole sort of reason for the webinar today. And what I'll do is if I get something like this, break this off a lower high, I'll just cut it. And a lot of times I'll cut it on the lower high. Now the thing is, guys, if this goes lower and you get the same price action, you've got to retake the trade of a daily level of resistance. Okay, so if I'm to do this just sort of in a sterile sort of manner. All right, if you have something like this going on, right, red. Are you serious? Okay, so, all right, green, green. Okay, red. All right, now let's say this is your higher low here. You see a little bit of green and you're like, great, I think that level's holding. Can you put on the trade here? Okay, and up she goes. All right, and up she goes. You get a little bit of green, and you're like +3, +4, +5. Not enough to go break even. You still got to break your red zone. Okay, and then all of a sudden you get red. Okay, and now you get green. All right, now this is support here, isn't it? On the very short term, this is support. Why? Because that is the fib that will rise here. Okay, so it's got its very best opportunity to rise off here, doesn't it? It's made a higher low. It's come off the resistance. It's now made a little fib of the rise. It's got its best opportunity that if it's going to break this and head up, it needs to happen specifically on that candle. Does everybody understand that? Okay. However, if you get something like this happening and you break that low there, it is time to get out of that trade, guys. It means you are wrong. And then perhaps it does something like this. Okay, and you get something like this happening again. Right, red, green. Okay, and it's essentially still in your daily level, and then you get red like this. Okay, and a little bit of green. What's wrong with just taking that same trade again? And just trying it all over again. The lower low sort of stop. And you're going to look for the exact same level. Happens all the time. Where you might be a level short. You might, where it might go a little bit, you might get a little continuation and then it'll go in your direction. And then what happens is a lot of folks take a loss having a stop here. And then you get the exact same confirmation and the thing's long all day. And meantime, you've lost 20 pips and you've been nothing but right. I'm a big advocate of just take the price action, take your -10 to 11, get out, wait for it to set up again, and then take it again. If I were trying to trade a major sort of daily level of support, 007, then a 15-minute, but otherwise I'll use a 2-minute if I'm right at support or resistance or in a continuation sort of trade. I'll take a 2-minute higher low at level of massive congruent support or right at the market open, etc. Guys, I know this isn't particularly enthralling, but does this resonate with you? I mean, because you can save yourself a bunch of pips. I mean, a bunch. Instead of taking a 25 pip loss when you're wrong, you're going to take -8. That stuff adds up quickly and in a hurry. George, I mean, I guess we're debating semantics a little bit. Your breakout trading may not necessarily be my definition. To me, if I was treating something as a breakout, I would look at, if I was looking at this, for instance, and I saw that red candle and just shorted the bottom of that, to me, that would be trading a breakout. Wait for the chart to catch up to me. To me, this would be trading the breakout here on that candle of this breakout wedge. What I'm saying is I'm looking for it to do this. And then continuation. So really I'm just playing the retracement of the prevailing trend. And then obviously looking to load the boat through here. Because a lot of times try and trade it, then you'll be right into the turning point of the trade anyway. So that it's a very good question you ask. Right? So you're saying, David, why don't you just wait for the change of trend? Why don't you just do this? And then get long here and then try and get long through here. Because a lot of times this is potentially the resistance of the drop, and you're going to do this. Oh, hello. I don't like taking, okay, it's lagging me big, but so a lot of times you'll hit like the major resistance of the drop, and then you'll try to make a higher low, and then just quickly low high and drop to the floor. I don't like taking change of direction trades after hitting the resistance zone. So that's why I prefer to try and take this higher low and with a stop not far underneath here, and then I know very quickly if I'm wrong and I can get out, as opposed to something like this where you might not even hardly get a reaction and it's just going to blitz you. So there's two types of trades there, Chris. There's the continuation trade is ultimately what one is looking for. I mean, I try to treat, yes and no. I think there's conservative ways to go counter trend, providing you have enough confidence in a certain zone. Right? I'm not here advocating going counter trend. I'm not here advocating going micromanaging everything you have. All right? It's just sometimes going the other way is the only trade you have, right? Isn't it? Thanks, Colin. I really appreciate that. That's very kind of you. No, I mean, it's scary, but sometimes but what I'm saying is you can use this, and frankly, you can use this in the continuation sort of methodology. Because what I wanted to point out was, all right, if you're looking at this, you see how this made the double bottom and then a higher low here? How is that any way, shape, or form different to this? Little double bottom, break of the high, and then a higher low. It's almost identical, just not on consecutive candles. Yet this one made a lower high and dropped, and this one broke that little red zone and went up. It actually made you some money. Okay? Well, the difference is that this one made lower highs and then broke the low and you got out, where this one broke the red zone. I'm not saying, like I said, if you're spending your life going counter trend, and I'm stepping over my time here a little bit, then you're wrong anyway. All right? And if you stepped aside here and you put an alarm at 129.40 or so, if you put an alarm up here this week and you try to sell that with the same sort of confirmation to the downside in the direction of the daily trend, and you did nothing else but look for that, you're my hero. Okay? And you can use the same sort of thing here. You can use the same sort of thing here in continuation trades. If you're looking at something like this to the downside, all right, and you get, green, green, green. And in fact, I use this for my confirmations, right? And then you get red, and then it goes green and immediately makes a lower high. That to me puts me in continuation shorts. This here, a lower high directly after a higher low in the context of a downtrend, that puts me short. That is my confirmation. All right. Then if it does something like this, red, okay, red, and now I expected to see some green here at the fib of the rise, so it goes green. Okay, now I need to see red lower low, and it does this. Red, immediate higher low, higher high. I'm in trouble, bro. I'm in trouble because it made a lower high, which should continue me short, but immediately made a higher low and a higher high. I am wrong in this trade. I'm wrong. It means it's going to the next fib level. It means it's going up here. That doesn't mean to say that it's not going to work. It just means it's going to the next level. Now, if that's like 15, 20 pips, I'll get out of it and I'll take my -8 and get back in here on the same confirmation. Because by the time it gets back down to this area, guess what? This is now the buy zone of the whole rise. And if I'm not break even by the time I hit that, then I'm in an unmanageable trade anyway, and I don't want to be in that trade. Because this could potentially do that. And if I'm sitting down here with a short in here, I have no way to protect myself. So sometimes I like to get out, get in higher, just so I'm in a manageable trade. Okay, so I'll use the same confirmation in the continuation trade anyway. And then obviously, you want this sort of thing to happen. Boom, boom, and then a little bit of green off the double bottom, and then bang, right? So, you can use the same approach. You can use the same approach for trading your continuations as well as your turning point trades. And that's obviously a much more conservative way of doing things. Okay? All right, but, when you, here I am busy telling you, but you can micromanage your trades and you can take counter trend. You understand that it's not what I'm here to teach you, right? I'm just saying that, where counter trend could also be with the trend, all right? So look, for instance, here, if we're looking at, say, Euro yen, okay? If you're trading off a, because the pound long, right? I think we all agree the pound is still in an uptrend. That means that, cable is still trying to head up, in my opinion, to 163. All right, now, it's been in a 4-hour downtrend, but at a daily turning point to the upside. So it's counter trend with respect to the 4-hour, but definitely trend trading with the daily. So you have to go counter trend to the 4-hour to trade in congruence with the daily trend to the upside. So you're going to have something to trade with that. And what I'm saying is you can use price action to help you insert yourself into those moves. Typically twice, try and trader. I think if you've got to pick a zone, right? You've got to say, and we're not talking about the advocacy of why a zone is a zone right now, but let's say you have a buy zone of 30 pips. Providing you haven't breached the zone wholeheartedly, you can still look to trade off of it, maybe pick up along. I don't know. I'm done in a sec. So, the MACD, I don't know, I find it just a little slow for me. It's a little slow. I'm happier with 2 hours stochastics and price action. So we're going to force me into an oscillator. Okay. Anyway, guys, good luck further today. Thanks for hanging with me. Correct, Chris. And if you guys, I hope that I see a lot of you at the International Traders Conference in Barcelona in a couple of weeks. It's going to be a lot of fun. I hope to see you there. And good luck further, guys. Talk to you soon.